Hello, welcome back. And today I'm going to go over some really good data, which I really like. I'm going to compare the housing market back in 15 years ago at the peak and right the aftermath of the US housing crash from 2009 to 2011 and compare that to 2024. So this is real objective data. Is not just opinions, because other videos a lot of people see are merely based on misleading, inaccurate, overhyped data to misinform everyone. So you know who I'm talking about. All right, with that said, let's go ahead and dive deep into my data, which is very, very interesting. I really love this. Right. And the headline on this article by Housing Wire by Logan Mohtashami, who's a very, very good data analyst, housing data analyst from Housing Wire. So I really admire his credible data. So here we go. The health of this housing market compared to 2024 data to 2011, which is the aftermath of the 2008 housing crash. So I'm going to dispel a lot of rumors, a lot of misinformation, a lot of it's just crazy about so many people still are uninformed, giving the access of information we have through various social media. So with that said, so the first paragraph is pretty much stating that today's housing market suffers from affordability issues due to the mortgage rates being in 7% and high home prices. So as recent as last year, 2023, home sales, okay? Sales is different than home prices. Home sales, which is transactions, okay, are trending at the lowest level ever. We're talking historic low housing. We're talking transaction crash back in 2023 at the lowest point in our history. Okay, so I want you to digest that for a moment. So in other words, lack of home inventory out there, giving the pent-up demand. So once again, I had to repeat this, economics 101, if demand is higher than supply, as it's been happening today and in the past 4 years even, and we can prove that point. All right. So let's go ahead and provide some good insight into the health of today's market. So in terms of underwater homes, one of the most significant changes in housing market since the housing crash 15 years ago has been the drastic reduction in underwater homes. Underwater homes means people having negative equity on their homes, meaning the loan balance of their homes are higher than the actual market value of their homes. Just another word for underwater homes. All right. So, fourth quarter 2010, again, several years after the start of the 2008 housing crash, there were 23.1% of homes were underwater. In 2024, this year, the number has plummeted to 1.8%, the lowest level in the history of America since 1776, the last several hundred years when America started. We have the lowest number of homes underwater. Okay. And this chart below clearly stated that fact. Okay. Approximately 1 million homes, most borrowers have better than 50% loan to value. So homeowners today have massive amount of equity, the highest ever in the history of America. So people that own homes for a number of years, you guys are sitting pretty. So you guys have a massive amount of equity, and you couple that with you locked in at a historical low mortgage interest rate, or typically 3% or even lower. You have a locked in effect. So most of you guys out there are not selling. Okay. It makes economic sense to stay put. Therefore, we are still having tremendous amount of low inventory across the country, although there has been increasing inventory lately this past year, but still nowhere the level of the pre-pandemic inventory levels. All right. Now, here's the situation. When we get another job loss recession, many households in America will have a cushion to sell their homes and not go into foreclosure at all. Okay? And people who sell their homes or use the equity, if people need to sell and have not lost their jobs, they can use that equity for down payment for another house or even pay cash for the next home purchase. Okay? So let's look at the days on the market. Now, one of the problems with having so many foreclosures and a lack of demand was back in 2011 is that it took over 100 days to close a transaction. We're talking more than around almost 3.5 months to close a transaction back in 2021. 2011, I'm sorry. That at that time was a sign of a clearly unhealthy housing market. Now, according to the National Association of Realtors, NAR, currently the most recent existing home sales report shows only 24 days on market this year. 24 days to sell compared to 3.5 months of 100 days 11 years ago, 2011. Okay. So in 2011, there were over 3 million active listings. Today, we are 1.128 million. Homes that are priced correctly today are selling very quickly. Oftentimes, were several multiple offer bidding war situation. Okay, let's go over the new listings. During 2021, there were 396,955 homes that hit the market without a contract. For the same week this year, 2024, the number was 70,606. Look at the, new listings, 2023 had the lowest newest listings data, and 2024 looks to be the second lowest new listings ever. So 2023, we have the historic real estate transactions crash, quote unquote transactions crash, not a housing crash, which is a clear distinction, which some people still do not understand the difference between this important two-word vocabulary. Okay. Here's a chart, national single-family new listings. As you can see right now, in July 2024, again, 70,606. And compare that to prior years is very, very much different. The major difference between new listings back then, 13 years ago versus today, is that we had a massive credit bust starting in 2005. Trust me, I lived through those times. I've been an investor for more than 20 years. I've gone through the various cycles. So I've done a lot during my career, and I could really understand what's going on. So been there, done that. Okay, and still surviving all these years today. So the massive credit bust starting 2005, which continued from 2006 to 2008, all before the job loss recession began in 2008, and all hell broke loose. However, that is not the case now. 2024 is a completely different housing environment. So case in point on this chart, if you look at the foreclosures and new bankruptcies are still below the pre-pandemic levels. Only 44,000 foreclosures started in Q1 2024 earlier this year. So you look at the dark red, which is foreclosure filings, and the bright purple is a bankruptcy filing. As you can see, back in housing crash 08, prior to the 08, we have seen some vertical elevation of foreclosure and bankruptcy that was filed. Then at the peak was 2009. Then after 2011, it has gradually subsided for the past 13 years, whereby right now it has been foreclosure and and bankruptcy are at a historic low level today because, as I mentioned earlier, because so so many people are so comfortable sitting on the massive equity of their homes and locked in at a historical low rate. So they feel very comfortable, they feel very financially secure, and they're not going anywhere. They're not moving because the mortgage rate today is still at a very elevated rate of 7% as we speak. Okay, so the new listings data for the last week over the years. Okay, look at 2008. There were 281,000 new listings. 2010, 345,000. 2011, 396. 2012 through 18. That means there were a lot of inventory. There are more supply than there are demand back in the old days, right? Back then. Okay, so today, what a difference a cycle makes. Right. So, I mean, this is just one data point that you need to know. But Logan Marashami says he could have written another 16 different variables that would make 2024 much different than 2011. So he want to keep it simple this time. So, and I want to keep it simple. So my takeaway is, again, unless there's some drastic changes beyond our control, or if we see another pandemic, or there's a war around in other part of the country that can affect the world's economy, or some black swan that are occurring in the foreseeable future, I don't see the housing market change too much because we are still have a historically low supply of inventory and the pent-up demand is still out there. So even at an elevated rate of 7%, so we're plodding along, just a steady, stabilizing situation and what have you. So anyway, hopefully, the takeaway is, I can dispel all the misconception, all the potential housing crash bros out there, try the doom and gloomers out there. They're trying to mislead the social media, mislead the public into thinking that will be an impending crash, this and that. So this data clearly does not show that. So anyway, as I conclude this, if you receive any value whatsoever from this video, please like and subscribe to my YouTube channel. And also comment below, what do you think? You think that this data point is a very clear-cut summary of what's really transpired out there? So this is a real true data. So hopefully my goal is to inform you to make a good housing price decision, whether you are owner-occupied buyer or whether you are a real estate investor. Those are this kind of data, concrete, credible data out there that you should look into, evaluate, and learn before you will make a decision. All right. And also subscribe to my email below on my website. So by being an email insider, you can become a free member of my investing club or organization network. And then you will learn more about real estate investing regardless of where you live in the country. Thank you so much. This is Siwen Yi. Have a nice day. I will see you on the next video. Bye-bye.